So hi everyone, we have today the pleasure to welcome Matt Vitale, hope the name is correctly,
Perfect.
From Birchal, and tonight's talk is all about crowdfunding, but before we go in there I just wanted to emphasize the values that Startup Grind stands behind, that making friends, not contacts, give first before you take. So make sure you have your questions ready. And I'd like to ask the first question to Matt is crowdfunding, what we understand under crowd. Maybe you can touch on what the crowd is. But before we go there, what is your background? Where are you coming from? Of course, you're coming from Melbourne. You are a father of 3.
Yes.
And married. And we would like to know, what is your background? How did you come up with crowdfunding and where did it eventuate?
Thanks Tony. And I'd just like to say thank you very much for inviting me up here. It's been amazing to meet everyone in this very passionate, vibrant community so far. So yeah, thanks for having me along. My background, I'm trained as a lawyer. I worked in private practice for several years at a major law firm, and also worked at a couple of banks. So I specialise in financial services and corporate law. The crowdfunding laws in Australia had a long gestation period, so I had a lot of time to watch what was happening and chip in on government consultations and things like that. I got talking to my business partner, Alan Crabb, who was co-founder of Possible, which is a reward crowdfunding platform, and he and I were talking over several years about how Possible would play in the equity crowdfunding space. And a couple of years ago, we decided to launch Birchal. So a new brand spun out of Possible to do equity crowdfunding, which we can get into in a little bit. But that's my background essentially, and now I'm co-founder of a financial technology business, and on the cusp of what we think is a really watershed moment for capital raising and small business in Australia.
Wonderful. Just to clarify, what is the difference between crowdfunding or product-based funding and equity crowdfunding? Can you demystify or clarify what it actually is?
Yeah, sure. So the academic papers, when they talk about crowdfunding, say that there's essentially 4 types. So donation crowdfunding, which is pretty obvious what that is. Then reward crowdfunding, equity crowdfunding, and peer-to-peer lending kind of features in there as well. Reward crowdfunding is essentially pre-purchasing a product or buying something of nominal value in support of what is more often than not a project rather than a business. Whereas equity crowdfunding is really seeking investment from an online audience for a business.
For equity in a business.
Absolutely.
Okay, a perfect example of the first part is Floor Hive, I understand, just a little bit further north from Coffs Harbour. It's a great example of Floor Hive. If somebody you don't know, it's a
who doesn't know about Floor Hive?
It's a beehive that has changed the way how honey is being harvested, and has again a substantial interest, especially from investors, through the crowdfunding. So in regards to the change in law, and I think there was quite a pivotal moment about a year ago. Can you mention to us what was that moment? What actually made that possible?
Yeah, sure. So the Corporations Act in Australia was amended, and it includes a new part 6.3, which is the crowdsourced funding regime. And what it does essentially is allows proprietary limited companies and public unlisted companies to raise money from retail investors online on a licensed platform like Birchal. This is a real game changer because previously proprietary limited companies would be limited to 50 non-employee shareholders. So this notion that private companies should be closely held because investors would have close access to management, but they really shouldn't be allowed to raise funds from the public. That was something really the domain of public companies. But what we have now is companies being able to advertise these securities offers online, which is something that even public companies can't do. So this is, quite a real game changer for companies that are crowdfunding, but also the ability of retail investors, so everyone, mum and dad investors, to invest in businesses that they wouldn't have had the opportunity to invest in before. These things were previously the domain of wholesale professional investors that that's what they do. They invest in these speculative opportunities, and some of them do really well, and others not so well. But that's part of the course.
And there's a limit. They cannot invest $100,000. What's the financial limit?
Yep. So for retail investors, again, which is everyone, the maximum is $10,000 per company per year.
Is there a minimum?
Well, the minimum is up to the company. As a platform, we will allow companies to set a minimum parcel size of $50, but some companies will choose to make that higher. But really, that's up to a company.
That's interesting. So you can attract 2,000 investors, and they can each invest $50 if you like.
Absolutely. Yeah.
It's quite an interesting proposition if you have existing customers. And it creates a really interesting way to raise funds that sometimes the traditional VC or banks do not play a role, but for businesses who have large following, can create really great opportunity to raise funds and have a smart capital, let's say, to be part of the business. Are you able to share some really good examples where that happened?
Sorry, what happened?
Where a large number of investors invested in the business. Think of maybe...
Yeah, instead of smart capital,
or as a smart capital.
As smart capital?
I'm thinking of the Uber for women.
Okay, sure. So, absolutely. So Shebah is a recent success of ours, and you threw me a little bit with the smart capital one, because this is a criticism that's often levelled at crowdfunding, is that the crowd is not smart, that the crowd is dumb money, that people that are investing small amounts of money don't have the critical analysis to or the ability to assess the merits of an investment opportunity to the same level that someone that is investing hundreds of thousands of dollars do. And as a platform, we just don't agree with that at all. It's all about, I suppose, a person's situation, but someone investing $1,000 will apply the same level of rigor to an investment opportunity, perhaps sometimes more than someone that has a lot of money to invest. We, as a platform, choose to work with companies that have a strong consumer proposition, and the reason for that is there are particular advantages of raising funds in this way. Being able to turn your customers into your investors is extremely valuable for businesses that have a strong consumer proposition, but also being able to advertise these offers increases brand awareness. So you mentioned Shebah. Many people didn't know about Shebah. So Shebah, for those people that don't know, is an all-women ride-sharing service. So they're like Uber, but only female drivers and only female riders. And it's an amazing service that is meeting a real need that I have to admit I hadn't really turned my mind to until we started working with them. But it's a brilliant case study for what's possible with crowdfunding, because George McEncroe, the founder, has told us that she'd been to all of the angel and VC investors and had been turned away by all of them. So they decided to do a crowdfunding offer because it was the only option left to them, and went to their community of 100,000 people, and they ended up raising $3 million from over 2,000 investors. And it's the largest campaign under the Australian regime so far. They're only the third to hit its maximum target, and it's just an amazing story. So
it's great to see success stories like that. And how many women invested into Shebah?
So 95% of the investors of those 2,100 investors were women. So, and I have a feeling that it's probably the largest proportion of female investment in a public securities offer around the world. I'm yet to hear of another one, but I'm happy to be corrected. But no one's been able to tell me yet.
So have you got any female founders in the audience who would like to top that? Yeah, there are some hands going up. Yeah, excellent. I would love to see that. So we will be on the agenda for the next funding raise of funds. And so if you can let us know about the regional context. We are in Coffs Harbour, and Coffs Harbour has some unique startups, some unique opportunities. And how can we put Coffs Harbour on the world map, on the Australian map of investors through a platform like Birchal? What are the some similarities maybe to some other campaigns you had?
Yeah, sure. So in terms of regional campaigns, we've hosted 13 campaigns so far, and that's the most of any platform, and it's close to $8 million in total for companies. So very proud of the early traction that we've been achieving. A regional campaign is the Gold Coast for Black Ops Brewing, which is a craft brewer, and a great example of a consumer business. A lot of people understand and like beer, so it's very easy to capture people's attention. Some of the fundamental things for a successful crowdfunding campaign is media exposure, and what we find is local stories and regional stories. They're at a particular advantage in terms of pitching to media, and the Black Hops campaign, a smallish craft brewer on the Gold Coast, got into the Financial Review just before Australia Day. So, it's an example of a local story that can get a bit of traction and reach a national audience. I think the other thing is crowdfunding is an amazing opportunity for businesses wherever they are in Australia now. It opens up a national audience for people because it is all online. So working through your campaign and producing engaging content and being really clear of your message and your audience, if it's executed well, then I suppose being in a regional area, you're at no disadvantage. You're in perhaps an advantage because people tend to, I suppose, be more closely connected in regional areas and willing to support each other, and that's often what you need to get it started, and the early traction can be leveraged to bring others along for the journey.
So the essence is I'm looking for a story that resonates with a large audience, also with the national papers, and if we have APN and News Limited here, represented in our local advocate or ABC, we are looking for those local stories that can potentially resonate with the audience nationally, maybe globally. Do you find investors coming from the global market? Are they allowed to invest into Australia?
Yeah, it's something that I suppose businesses need to be mindful of, that a crowdfunding campaign is in Australia under Australian law, so it's administered under an Australian regime. Companies really need to be careful not to be seen to be marketing their offers to overseas audiences. It can get a bit tricky because it's online, and certainly there's media is publishing to a global audience. So unfortunately, there's no safe harbour though. It's kind of it's if it gets on the radar of an overseas regulator, then it's potentially an issue, but it's something that companies need to be mindful of.
Is there any other campaign you would like to share that may be relevant from the portfolio of campaigns you have that resonated also or created a story that was then interesting to the broader? So besides Shebah, it was a great success. Have you got any other story that you think is worth sharing?
So the first proprietary limited company to raise under the regime was an Australian watch brand called Birchal. So they're based out of Sydney, and that was a great campaign for fashion, a watch company that they were able to kind of capture the audience, they're passionate customers to bring them along for the journey. So that was an exciting one. That was the first proprietary limited company to raise. Another one is Memo Bottle. So this is an example of a company that had executed really successful reward crowdfunding campaigns, and then ran an equity crowdfunding campaign. So they make flat water bottles. You may or may not have seen them, but their water bottles are designed on the Australian paper size. Sorry, they're international paper size. So an A4, an A7, and so on, designed to fit really nicely in your bag. But they had a really passionate audience of people that had backed them in their previous reward crowdfunding campaigns, and then now that it's legal, that it's possible to bring people in as investors, they were able to convert a lot of those early supporters into equity crowdfunding investors. So that's another great one.
Excellent. And in regards to a number of followers and a certain, let's say, base audience, is there a rule of thumb? Do you need to have a certain number of people following you, or can you start even before you have the number of followers?
I think what we often say is that a company needs to have a strong consumer proposition. So that's, I think, the starting point. And thinking about it in that way gives us some flexibility to, I suppose, be stage agnostic. So, there are some companies that we'll work with because they have, I suppose, the ability, in our view, to generate an audience quickly. And they might have a great founding team, and we think that they could execute. Obviously, having an audience already that you think will come along for the journey is an advantage, but it's not the end of the story.
So if you can imagine the stages of companies that they are at, sometimes it's just early stages of their revenue growth and a growth stage, and then sometimes there's quite a large revenue that is coming in already. So do you recommend to explore the crowdfunding at the early stage or later stage, or is there a rule of thumb or success stories that has like a common thread that, okay, these are more successful if you have large amount of users? I'm trying to figure out what is the most successful combination you can have.
Yeah, I think an engaged audience is extremely helpful. The key advantage of crowdfunding is, and what companies often say to us is, we have all of these Facebook likes or Instagram followers, and in the context of a crowdfunding offer, being able to market to that audience, then the value of these social media assets increases, or they change the way that they think about their online presence. I think it's an investment offer at the end of the day, right? So making sure that your affairs are tidy and in order is really important. So we work with a lot of businesses that perhaps don't have the right structure. As an example, that might be organised as a unit trust instead of a company. So there are some fundamental legal requirements for making a crowdfunding offer. So making sure that those things are in order. But the most important, I think, is having a clear plan for what you will be doing with the funds. So it'll help you to make your pitch to investors and draw people in. So if you've reached a critical point in your business where you're maybe expanding into a different market, or you want to introduce a new line into your product range, or you want to expand to another site, that's a really logical point for you to go to the crowd and your supporters and say, hey, we want to take the next step in our business. Will you help us, join us, and come along for the journey?
So it does sound there's quite a social aspect, or many companies are raising funds because of the large number of followers, because they do something really good for the environment, or there's a really social part. How strong does the social part play a role when you raise funds? Or is there something else that is more important for many, even though they have the social aspect of the company, is there something more important to raise, to make people aware that there's returns?
Yeah, I think it's a tricky one, and I make some observations, and with the disclaimer that I wish it was different, but these are investment offers, and I think sometimes leading with a social message or an ethical objective can be a little bit distracting to investors, because after all, you're raising investment. So, you know, when you might have a core group of passionate followers that will invest or give you money no matter what you do, but to really achieve scale for a crowdfunding campaign, you need to convince people that aren't close to your business. And at the end of the day, investors invest for a return. So I think that's a given with any crowdfunding campaign, is you need to lead with that. Why is this a really good investment opportunity? Why is this a good decision to allocate my capital to you, and what are the prospects going to be? There will always be risks, but that's what you're trying to allay or instill some faith into the investor, that you are the right person, have the right team to execute your plan. But the social aspects are really important, because these are the other things that will help you rise above or allow you to break through to national or international awareness. And Shebah is a great example, because it's a tech business, a really compelling opportunity to execute, so the business fundamentals were there, but they're solving a very real social problem, and that's, I think, probably what elevated them to the next level, rather than just being another tech business that might become profitable and investors will get a return. But the reason why the media wanted to write about it and people were so passionate about it was because the social element to their business. But had they led with just that, I'm not sure that it would have achieve the same result.
Yeah, absolutely. It's evidence that it resonates with lots of women to be safe when they call an Uber or a taxi, and it's certainly in big cities very relevant. In order to estimate, or what figures can you share with us around the equity share when companies give out the equity? What percentage normally of the company do they give away?
Yeah, it's the observations from the 13 offers that we've hosted is it's probably between 5 and 20% that's offered. So every offer needs to have a minimum target and a maximum target. If the offer doesn't pass its minimum target, then it doesn't proceed and all funds are returned to investors. And if it achieves its maximum target, then the offer must be closed. So even if the offer period hasn't ended. So based on that, they're the ranges that we've observed so far. And
so you work around Australia. Do you have what does Birchal do? What do businesses get when they engage Birchal?
Sure. I'll step through our process. Okay. I think that's probably so what we tell companies is it's basically a 12-week process end to end. It might it might be shorter or longer depending on a company's circumstances, but all things being equal, it's about 12 weeks, and it's broken up into 3 stages. We allow about 3 to 4 weeks for a company to organise all of their affairs. I mentioned some of the legal issues before, but getting marketing collateral together and really agreeing what the marketing plan will be, the media outreach plan, and so on. Birchal has a company profile feature, so it's somewhat innovative among crowdfunding platforms. We'd like to refer to it as being more company focused than deal focused. So you'll come to the Birchal page But all companies have a profile page that they'll use the same URL for their lifetime of using the platform, and we cycle through their activity with a card. So it takes about 3 to 4 weeks to get all of that set up and agree the plan. Then we run all companies through an expression of interest process. So at this point, there's not a lot of information about the offer that we're releasing to the market, but we're just saying to everyone, Shebah is thinking about raising funds, who's interested in investing? And we're really taking full advantage of the relaxed advertising restrictions at this point and casting the net as broad as possible. What we'll get is a list of people that are interested. They've basically told us who they are, why they're interested in the company, and how much they'd be interested in investing.
So this allows you to estimate the value of the company, I suspect.
Yes, so I suppose it doesn't reveal anything on value at this point because we haven't said anything about value, but it's more about the discretionary spend of the investors. And what it does is allows us to tailor how we'll interact with the people on that list. So, if people have expressed interest at a very significant level, we'd strongly encourage you to catch up with them and, find out why they're interested in your business and what additional information they need. And, whereas others might be sufficient to just send an email. But yes, it does allow us to scope the offer. It'll allow us to understand, what should the minimum parcel size be, or make some recommendations to what the minimum parcel size should be. And
parcel size, you talk about minimum $50, $100?
Yeah, that's right. Okay. Because if you've only got, 5 or 10 people that have expressed interest at $50, but the majority of them have expressed interest at, $500, then you can probably get away with a $500 minimum parcel size, as an example. It also helps us to scope the size of the offer. So, we look at what the minimum and the maximum should be. And we try to help companies make all of these decisions in terms of structuring an offer based on data. So a company will typically be working on their offer document while the expression of interest is running. So the EOI runs for 3 to 4 weeks. And we help companies prepare the offer document. Now, everyone's different. So some companies feel that they'll need to engage a lawyer. Most will need an accountant to prepare their financial statements to go in the offer document. But we have a template that we can provide, and basically we go back and forth with the companies on what we call a pre-submission draft. And we like to get it to about 80 or 90% there. We'll often assemble information that a company's already got. So if they've prepared an information memorandum or something similar in the past, we'll use that and start to populate the document with that. But then we hand it back to the company because we have a role to perform as a gatekeeper under the Act, and it, I suppose, gets difficult if we're reviewing our own work. So we do as much as we can to help the company do as much as possible, and then we get them to finish it off. What we like to do is have the draft offer document ready towards the end of the expression of interest campaign, and then we encourage the company to sample the EOIs and their other networks with feedback about the offer before they open. And the reason for this is we don't want any surprises when the offer is open. We want people to have got as much feedback ahead of time about their valuation, other aspects about their business model, whether they've provided enough information for people to make an investment decision, and so on. And then once the offer document is ready and the EOI has finished, then we'll open the offer again for a 3 to 4 week period. So it's 3 to 4 weeks at each time, and the goal is to get to your minimum target as quickly as possible. And what we've done during the EOI phase is tested our digital marketing strategies, seeing what works with various social media channels. We help companies with that and to set that up. And then we identify what's working and then agree the plan for while the campaign proper is open. And then once the campaign's open, then we execute, and it's mainly working your expression of interest list and digital advertising. Media outreach is also a really big piece, and there's a few key parts of a campaign that we think are newsworthy. So we'll work with a company. Some companies will engage a PR firm, but we're also happy to share what insights we have so companies can pitch themselves. I think journalists often like to speak to company founders more than a PR agency, but so I think certainly company founders shouldn't be scared about pitching to media. I think it's a really good skill to have, and we help by identifying what are the crowdfunding specific stories that could be pitched, but then also what is it that is particular about a business and the industry that they're operating in for these additional themes. So if you look at Shebah as an example, there was obviously the female investor theme that really resonated with the media. There was George McEncroe's founder story. There were the ride sharing and safety issues. So it was really rich with a lot of themes that we could pitch to the media, and the coverage was fantastic. So, but every company is different, and we provide help with that too. And yeah, that's our process.
Excellent. And if you can share, Shebah, what was the distribution or the packet size across the investors? Is there like a bell curve, or how would you see it? The average investment is not, it's skewed. And in particular for Shebah, because we had one investor that invested $1 million. So that's going to skew it a little bit, from a $3 million raise. Importantly, that one investor was introduced through the expression of interest process. So, so it does work. It is possible to find these big investors out there through this process, which, but yeah, 2,100 investors, so it's about $1,000 if you take that $1 million out. Yeah.
So.
Okay. And what are the costs involved in engaging Birchal?
So there's our fees. So we charge $900 for publishing an expression of interest campaign. We charge $2,000 at the point that we've reviewed the offer document. So this covers we have to perform background checks on all of the directors and senior managers in the business and the company itself, and then obviously the offer document. And then we charge 6% on funds raised as a success fee. So what I would say is it costs us a lot more than $3,000 to get a company to the point that they're opening, but we back end everything as much as possible, and our goal is for equity capital to be available and for crowdfunding to be as efficient and cost effective as possible for small and medium business. So we feel it's really important to do everything we can to keep our upfront costs low. In addition, there are other costs for the activities that I mentioned through the process, but what we've tried to do is help companies or empower companies to make decisions about how they will target their campaigns. Because preparing a prospectus for a public company will cost you hundreds of thousands of dollars in professional services. I know I used to do them, right? So there's a reason why only big companies would do that in the past, but now it's important that companies, or that this is efficient and cost effective, because otherwise no one will use it, and we think that'll be a missed opportunity. So if it's helping companies understand how they can effectively pitch to media or set up their social media ads, or identifying law firms that can provide good services for value for money, then that's the additional value that we feel we can provide. And often a company will say, I'm happy to spend this money because I don't have the time to do this thing, but we want them to make the decision on that basis rather than feeling that the extra $10,000 to $15,000 is a necessary cost. In non-virtual costs is a mandatory cost for making an offer. So.
Excellent. Well, thank you very much, Matt. And I think all my questions are answered so far. But we have this amazing audience here, and I'd like to pass the microphone to someone who's got an eager question. Here we go. There's the first one.
What are the differences in financial reporting requirements for a crowdsourced equity funding versus, say, going public or,
Yeah, so a public company needs to produce audited accounts. For public companies that converted to raise under the regime in that brief period before private companies could, they had some concessions. So some of them don't have to prepare audited accounts. But basically for a proprietary limited company, they need to prepare an annual report and provide it to shareholders. The accounts don't need to be audited, but they need to be prepared in accordance with the accounting standards. So they're not audited accounts, and there are some additional disclosure and governance obligations that the companies are subject to, like being subject to related party transaction rules and some other things. So it's a little bit more, but it's not as burdensome as becoming a public company.
Matt, I might hold this and ask two questions if I
Sure.
can. The first one is about Shebah. You said that they shared the offer among their network. I'm really interested in how they had a network to begin with. And my second question is, what would be the average spend, say for $1 million raise, in addition to what you've explained your fees, but I'd imagine there's a lot of extra costs attached to that marketing and PR exercise. So I'm just interested in what sort of quantum of investment some of your 13 may have made.
Yeah, sure. So Shebah was an existing business at the time that they made their crowdfunding offer. So their audience of, I think it was roughly 100,000, were people that were already users of their platform as either drivers or riders, or other people that were just interested in the business. So that's, I suppose, how they had their audience. In terms of costs, I mean, look, I mentioned offhand 10 to 15,000, but it does vary in terms of non-virtual costs, and it does vary. If I can break it down, most companies will need to revisit their constitution. If they have a shareholders agreement, often companies will terminate their shareholders agreement. There's a technical legal reason for that. But the legal costs can range between 3,000 to 5,000 for those kinds of things. Then there's probably another couple of thousand for accounting services. So if your financial statements that you've prepared don't include all of the things that you need for the offer document, not every company prepares a cash flow statement every year, and not every company prepares a statement of changes in equity, but they're things that need to go in the offer document, so there might be some accounting fees as well. In terms of gauging a PR agency, it depends on the engagement, but that's probably another few thousand there. And then marketing can vary. So it really depends on how much money you want to raise, but also how much it usually costs you to acquire a customer. And they're probably two things that can, if a company is already using social media advertising to acquire customers, they probably have a good understanding of what a conversion cost is for them. And then, it's kind of a mathematical formula to work out what it might cost you to market your crowdfunding campaign. But we also get data during our expression of interest process that helps us scope how much it might cost as well, because when you're marketing to a customer, you're selling your product or your service, but you're not offering an investment opportunity. Doing the EOI campaign first helps us understand a little bit about how your audience might respond to an investment opportunity.
So, a stab in the dark, $1 million raise, what do you think it would cost?
It could be as low as 5,000. It could be as high as 15 or 20,000. It really depends. But that's, I suppose, the range.
Matt, how's the blue sky component of equity raising regulated? So in your projections as accounting standards, or?
I'm sorry.
The blue sky. So I want to raise.
I'm going to be nervous when you mention blue sky.
Yeah. So we're going to say that we're going to raise $1 million. and we aim to turn it into $10 million in 2 years' time. What evidence do you need in your original documents to support that?
So, there's minimum content requirements for an offer document. So an offer document basically contains 4 sections. The section that companies spend the most time on is the about their company section. The other 3, you don't really need to worry about because most of the information is either taken directly from the Act or it's information based. There's only one way to write it. The about the company section talks about your business model, your business strategy, the market that you're servicing, competitive landscape, your financial information. I suppose companies need to be careful when making prospective financial statements, particularly in a retail offer document, because it's often difficult to provide a reasonable basis for a projection that is far out into the future. Larger companies or prospectus might have more far-reaching forecasts, but they're usually supported by an independent third-party accounting firm that's gone through and verified the forecasts and so on.
Yeah, so do they need to do that? For this equity raising, do we have to do that? Some supporting evidence?
Yeah, you absolutely. If you're making a prospective financial statement, then you absolutely need to have a reasonable basis for making that statement. What ASIC says, though, is that for early stage businesses, there will rarely be a reasonable basis for a company to make a statement like that. And this is where it's a bit different for companies that are maybe raising capital privately, where you're preparing an IM, which is an unregulated document where, and typically dealing with sophisticated investors that I suppose the view is that they're in a better position to be able to test you on the claims that you're making in the offer document. But there is some responsibility on companies in the context of a retail offer document that you can't be making statements because people are less likely to challenge you on them. I would say that some documents do include short-term estimates, but ASIC is pretty narrow on the circumstances where they think that they'll be appropriate, and it's typically where the forecast is for not longer than 2 years, and it's an existing business, so you can kind of refer to historical performance and say, the business has been growing at 30% year on year for the last 3 years. We think that that's going to continue, and we're raising funds to implement or execute these marketing plans. We think that's going to increase. But if you're going to do that, then you need to really set out fairly clearly the assumptions that underlie those projections. But I think ASIC's starting point is no, don't include them. But if you do, you better make sure that you have a reasonable basis, and at least you can set it out so someone can consider whether they agree or not.
Mike, can you just expand a bit further on that? So the requirements would be, like you say, an information memorandum is unregulated. You put all your forecasts and everything, and then you get hit with all the questions by your investors, which is what happens. So in this case, how much detail? So you said there was 4 sections about your company as your primary.
Yeah.
Can you expand on what everything we do need to put in there?
Yeah, sure. So explaining about your business. And your business model. So how does the business make money? And it's also important to make some statement about the market and the industry that you're operating in. How big is the market size? Where do you fit within that market? What is the opportunity that you're going after? Which is different to a forecast. It's saying that we're operating in this market, and this is what we're going after. We're not saying that this is what we will achieve. You'll also need to include your financial statements. So the minimum requirement is your most recently completed financial year. But then there's also, we're in June now. So companies that are preparing offer documents now, including financial statements ending 30 June 2018, So what we're saying to companies is effective disclosure means you will need to include something about what's happened this year. We're 11 months into this year, so there's a bit about that. You'll also need to include information about what you're going to do with the funds. So what is the reason for raising the capital, and how are you going to spend the money? The other thing that you'll need to include is information about your team, so board directors and senior managers. And importantly, you know, it's not very common, but if directors have had things in their past, so you know, a previous insolvency or you know, something in their background, then that needs to go into the offer document as well. I suppose, you know, stepping back, it's all of the things that you think you know, a third party that doesn't know anything about your business would need to know to make a decision to invest in you or not.
Perfect, that's very clear, thank you.
Yeah, absolutely. Yep.
I was just asking if we could have a checklist of to-do things or what we need to cover in order to do this. So Matt has something that he can provide us.
Yeah,
and can
absolutely.
share with the audience afterwards. Any other questions? Here we go.
So I'm just wondering, with the with your customers that you've already worked with, did you go through a selection process for those companies? And what are you really looking for in a company that you want to partner with?
We go through a selection process of sorts, and the reason why I describe our process is to point out that it is quite detailed. So, you know, we're working with businesses over an extended period of time, and you know, there's, I suppose, some natural attrition once we explain to people what is involved. You know, some decide that maybe it's not, yeah, it's a lot, it's not for me now necessarily. So yes, it's a selection process of sorts. In terms of what we look for, we always come back to companies needing to have a strong consumer proposition. And that's, like, this regime is open to all companies, but for Birchal as a platform, we decided to focus on the businesses that we feel we can help the most. And certainly in the early days, the game changes of the regime that retail investors can invest, we can advertise these offers online. So businesses that can benefit from capital raising this way are the ones that have a consumer offering in the market, so they'll benefit from the increased brand exposure. They'll benefit from having their customers closer to them as investors. But then also, and I haven't mentioned this yet, but we're a hybrid equity and reward platform. So I spoke a little bit about reward crowdfunding. Have I mentioned Possible? So Possible is a reward crowdfunding platform, and it's a sister company of Birchal's. So we have a lot of experience with reward crowdfunding campaigns, and we decided to allow companies that wanted to do equity crowdfunding to offer Possible style rewards in addition to shares at the same time. So what that means is, you know, when we work with a craft brewer, then, you know, they can offer t-shirts and beer and, you know, a day with the brewer and all of these other things that might interest or attract an investor to investing in a brewery. It's not just about the shares, it's, you know, I'm a part owner of this brewery, I'm really excited about it, I want to be involved. So all of the things that we've done previously with reward crowdfunding campaigns, we're just supercharging, if you like, by adding shares as well. So.
Would you have a campaign for a company pre-revenue or like a pre-seed? Is it something you would take on?
Yeah, it's potentially. Yeah, I mean, I would obviously need to know more, but I think what I was saying about the importance of a strong consumer proposition is that we can be stage agnostic. if we feel that a company has the ability to get an audience and there are some investment fundamentals there, then if they're pre-revenue or if they're very early stage and we think it's a compelling opportunity, then we will work with them. And I suppose this is different to other platforms or other forms of capital raising that have prerequisites for companies that are at a certain stage or achieving a certain amount of revenue. We do things differently, but we also want to work with businesses that we feel we can help. That's I think, it's not, what we do is not for everyone, so.
And what is the minimal size you would go for a round? Is it 100,000, 200,000? What is the smaller size? About big ones.
Yeah, so the smallest round that we did was for a restaurant called Sash. So it's a Japanese fusion restaurant. They make sushi pizza. They're in Windsor in Melbourne if you're in town. Really great Instagram photos. But they raised 185,000. And I think that's probably getting to about the level that I think, if it's much lower than that, it may be uneconomic for a business in terms of the time and the costs that I've mentioned before. When you start, thinking about things, then and it's not just our fee. Like, we're happy for people to succeed, and every success kind of strengthens us, and we want to support businesses, but there is a lot of work for businesses to do as well, so I think that's probably about the lowest.
Wonderful, thank you. Any other questions before we... No more questions? Are we all good? Now I'll open the stage for networking, so thanks very much again, and we hope to see you. Thank you.
Yeah, thank you. Thanks very much.
Please have a respect.